Good morning, friends. This is Wednesday, August 3rd. I'm Marv Eisen of Timeless Dollar, and we start the day looking at the economic calendar. No announcements that are going to be market moving today, so let's move right on over to the morning news. I use CNBC. You use whatever news source you feel comfortable with and confident in. But nevertheless, whatever news source you use, nobody knows where the market is going to go or can tell you where the market is going to go. Mortgage applications inch up. As you know, that mortgage rates have been increasing. It will cost you typically around $10,000 more in interest now than it did a year ago on a mortgage of around $300,000, $350,000. So that's a significant amount of money. Anyway, let's move over to the S&P. And this is the E-mini for yesterday, August 2nd. And I want to follow up in a short video today about a trade that I mentioned in my previous video. What I want to tell you today is referring to a trade that I think is the basic trade that all E-mini traders should have, and that's the gap trade. If you have only one trade in your quiver, the gap trade should be that trade. Now, gap trades, of course, are when the market opens above or below the previous day's close. And that gives information that the gap might close. And the gap closes 70-75% of the time, which is a pretty high percentage, given that we're talking about the S&P market, which is notoriously erratic. But nevertheless, the gap trade is a trade that we should always look for if we look for nothing else. So yesterday, let me go back here. Yesterday, the market opened right about over here, okay, and I have the previous day's close indicated on my chart at 41.18. Now the market opened down at 41.05, so that gives a 13-point potential gap trade. So if you said, wow, a gap exists, I'm going to jump on. Well, look what happened. If you jumped on when the market opened, you would have quickly found yourself down 30 points. Nail-biting territory, my friends, right? Nail-biting territory. But look, the gap trade is still a powerful trade, but you need to know how to play it. And just as in my video yesterday, the actual market action yesterday, look at this. You see this hammer that developed indicating a reversal, or at least the market setting up to do something. And of course, with a candle like this, a hammer like this, we can pretty much be assured that the market is going to head upward, right? And I won't go into why that is. If you don't understand that, then you should take someone's E-mini course, because this type of hammer is a very important signal to be knowledgeable about. At any rate, the gap trade was in fact successful yesterday, but more important in recognizing where a trade is setting up, you have to look at possible market patterns, candlestick patterns. And remember, I only teach 6 trade setups: GST, TMC, gap, support and resistance, time and price, trend, momentum, and candlesticks. And here's a candlestick pattern setting up for the gap trade. So that's my video for today. Use the gap trade to be profitable. It doesn't occur every day. Markets don't open every day above or below the previous day's close. I believe they will today. It's just before the market opens. It's 9 o'clock. And I'm not going to go over to my chart for today, August 3rd. This is my chart for yesterday, and I'm not going to show you my chart for today because I calculate the daily trading zone, which is where prices are likely to trade for the day, with the indicated support and resistance and the range between them. If you want those numbers, I provide them as a subscription service on my website, timelessdollar.com. But still in all, learn to play the gap trade if it's the only trade that you feel comfortable with. And remember, if the gap trade is elusive, as it was yesterday, look at this volatility in the morning. Look at the chop. The gap trade, this candle was a strong signal, okay, this hammer. And look, after the hammer, you could wait. If you're playing the gap trade, you can wait until the market approaches it. If you got on right over here with, if you're playing the micro E-mini or the E-mini, you can jump on with maybe multiple contracts and ride it up. And usually there's an overshoot, usually. Sometimes no, but usually there is. But nevertheless, play the gap trade, but look for the warning signs for areas where the market indicates this is the place to jump in. Make your trade here, okay? So learn the significance of this trade setup. So thanks for watching. This is Marv Eisen for Timeless Dollar. Trade with lots of patience, and I'll see you in my next video.